Okay, so we've got this Kikkoman 2023 corporate report, right? And listener sent this in. They want to know what's the deal with this company.
Yeah, it's a good one to look at. Kikkoman, they've been around forever, but they're still going strong globally.
Exactly. So for everyone listening, we're going to break down like how they're doing business-wise and what their plans are.
So, kind of a deep dive into, what makes this iconic brand tick. The report really gets into their strategies and how they see themselves growing.
Right. And, before we get into the nitty-gritty, it's good to remember what Kikkoman's all about.
They have these three core principles, right?
Yeah. The super consumer focus, they really push for sharing food culture internationally and
And they want to, be a positive force globally.
exactly, make a real difference.
Yeah, and you can see that in their slogan, like seasoning your life, right? It's not just about selling soy sauce, it's a bigger idea.
Totally. It's about the experience of food, the joy of it, connecting people.
And Kikkoman wants to be part of that, bringing flavor, healthy eating, even like blending different cuisines.
Absolutely. So this report, the 2023 one that we're looking at, it really shows how they're putting these ideas into action.
It lays it all out, their management approach, what each part of the business is doing, how they're creating value.
Right. And just so everyone knows, this covers their fiscal year 2023, so April 1st, 2022 to March 31st, 2023. And it's for the whole Kikkoman group, not just one little piece.
So it's the full picture, global operations, everything. Gives us a lot to work with.
Okay, so one thing that jumps out, Kikkoman, they're not just about soy sauce anymore. They've been diversifying since like the 60s.
Oh, yeah, they've branched out big time.
I mean, think about it. They've got Manjo, Del Monte in Asia and
Yeah.
Oceania, Man's wine, even Kikkoman soy milk is a big thing.
It's really interesting to see how they've used that, expertise in fermentation to get into all these different areas.
And don't forget, their Suyu and Tire brands, those are huge in seasonings.
Oh, right, right. And then there's the whole clinical diagnostic enzymes business. Totally different.
Shows you how they're thinking, right?
Adapting, finding new ways to grow. It's key for any company that wants to last.
Okay, so let's talk going global. Kikkoman, they started way back, late 50s, going into the U.S.
Yeah.
And they didn't just export, they really wanted to be part of the American food scene.
That's a really important point. Setting up shop there, first sales, then production, it shows commitment.
And it worked. I mean, Kikkoman is like the soy sauce in the U.S. now. They're in, what, something like half of American homes?
That's huge. Just shows you the power of like consistency and really understanding what consumers want.
Kikkoman Foods, INC, their U.S. arm, they actually just celebrated their 50th anniversary last year, in June 2023.
50 years, that's impressive.
Since then, they've expanded everywhere. Europe in the 70s, Asia in the 80s, South America more recently. Over 100 countries now.
Yeah, they're not slowing down. And you can imagine each new market has its own quirks, its own challenges.
So let's look at the numbers, how this global strategy is playing out financially. In Japan, their home turf, they had 154.7 billion yen in revenue, fiscal year 2023. Profit was 9.3 billion. But the CEO, he actually called it dull growth there.
Yeah, I noticed that. Maybe Japan's just like a mature market for them. Growth is harder to come by.
Makes sense. Now, North America, that's a different story. 338.5 billion yen revenue, profit of 38.6 billion. The CEO is pretty happy with that, called it favorable.
Clearly, that's where their early global push really paid off. North America is carrying a lot of weight for them.
Right. Now, Europe, they had 52.6 billion in revenue, profit 5.8 billion. But the report mentions stumbled growth there, blaming the economic climate.
That's a good reminder that even big global players aren't immune to, what's happening in the world.
Definitely. Finally, Asia and Oceania, 70.4 billion revenue, 4.9 billion profit. That's an area to watch, I think.
Oh, for sure. Lots of potential there with those growing economies.
Okay, so let's get into the specifics of their different business segments. Starting in Japan, their foods manufacturing and sales division, that's pretty diverse. They've got the soy sauce division, brought in 43.155 billion yen. They're highlighting their Tokusen Maru Daizu soy sauce that's made with whole soybeans, and their Itsudemo Shinsen line, it means always fresh.
So they're covering both ends, the traditional high-quality stuff and the more convenient options.
Right. Then there's the food products division. That's things like other soy sauce-based seasonings, Japanese-style mixes, even Del Monte tomato products for the Japanese market. That brought in 49.367 billion. Brands to know here are Han Suyu, that's their soup base, and Uchi no Gohan, for ready-to-eat rice.
So they're really using that soy sauce base to branch out into a bunch of different areas within Japan.
Now, beverages. This is interesting. 42.483 billion in revenue. It's mainly soy milk, Tons of different flavors, and also Del Monte fruit and veggie juices. And get this, they're actually putting out recipes using soy milk in cooking.
That's smart. Soy milk's got that health halo, and it's versatile. Giving people ideas on how to use it, that's a good way to grow that market.
Yeah, it's not just selling a product, it's like building a whole culture around it.
Exactly.
Okay, liquor and wine division, that's Manjo, with their Han Mirin and cooking sake and also Man's Wines, brought in 10.142 billion.
So a little something different, for special occasions, not just everyday cooking.
Right. And finally, in Japan, they had this other category. Includes Kikkoman Biochemifa, their biotech arm. That brought in 21.893 billion revenue. Profit was 1.801 billion. That's all kinds of stuff. Clinical diagnostic enzymes, hygiene products, even medical hyaluronic acid.
It's almost like a hidden side of the business. And it's profitable, too.
Okay, so shifting gears, let's look at their overseas foods manufacturing and sales.
Okay.
This is big. 143.736 billion yen revenue, profit of 27.24 billion. The biggest chunk of that is their overseas soy sauce division, 120.71 billion.
That's really where they're killing it internationally. And they've got a good strategy positioning soy sauce as like an all-purpose seasoning, not just for Asian food.
Yeah.
And they do a lot of work creating recipes specifically for each region.
Localization, that's key. Make it relevant to how people actually cook.
Exactly.
Now, their Del Monte division in Asia and Oceania, that brought in 8.127 billion. They've got production in Thailand and China. It's not just tomato products, it's a whole range of stuff.
So again, adapting to local tastes, figuring out what works in those specific markets.
Right. And finally, we've got their foods wholesale business. This is JFC International. Massive operation. 343.508 billion in revenue, 24.598 billion profit.
They're basically the go-to for Asian food, mostly Japanese, all over the world. They handle something like 15,000 different items.
The whole ecosystem they've built.
Yeah, and it's clearly working for them.
So Kikkoman, they've got big plans for the future. They call it their Global Vision 2030. 3 main goals make Kikkoman soy sauce truly global: create new food experiences and promote healthy lifestyles, and be a company that really matters in the world. Their theme for all this is offering #1 values.
It's a pretty clear statement of ambition, They're not just thinking about selling more soy sauce, it's about making a bigger impact.
And they've got a medium-term management plan for how they're going to get there, covers fiscal years 2023 to 2025. 2 big focuses: adapt to the changing world to keep growing and improve profits and help solve social issues.
That's smart. Companies can't just be about profit anymore. They've got to show they care about the bigger picture.
Right. So their specific targets for 2025, they want to grow sales by at least 5% each year, excluding currency fluctuations. They want a business profit margin of at least 10% and a return on equity, ROE, of at least 11%, again, excluding currency effects. They actually already hit their sales target last year. Revenue went over 600 billion yen.
So they're off to a good start. Be interesting to see if they can keep up that momentum on the profit side.
Let's break it down by business area. Overseas soy sauce, they're aiming for 7% annual sales growth, not counting currency changes. Last year, they beat that target in every region. Their strategies are all about building the brand and giving people recipe ideas.
Sounds like it's working.
Now, overseas wholesale, same growth target, 7%. They did well on sales, but rising costs squeezed their profit margin a bit. They're focusing on keeping the supply chain stable, expanding their locations, and getting better at procurement.
Yeah, managing costs. That's a big one for everyone these days.
For sure. Now, domestically, they're aiming for 2% sales growth and an 8% profit margin. More conservative, Last year was tough. They had to renegotiate prices with everyone because of those rising costs. So now they're focused on generating demand, getting more efficient, and selling higher value products.
It's a different game domestically, slower growth, so they need to be more strategic about how they make money.
And the CEO was pretty open about the challenges, He said it's tough to increase profitability in Japan right now. Raw materials are expensive, logistics costs are up, the weekend's hurting them, and all those price negotiations took up time and energy they could have spent on, growing the business.
Yeah, that makes sense. It's a balancing act.
Okay, let's look at the big financial picture. Total revenue for fiscal year 2023 was 618.899 billion yen. That's a 19.8% jump from the year before. Business profit was 58.777 billion, up 12.4%. Their profit margin was 9.5%. And got to remember, the weak yen is boosting those numbers a bit, especially the overseas earnings.
Yeah, but even so, that's strong growth. And it shows how having a global presence can help even things out when currencies are all over the place.
Exactly. And if you look at their performance over time, even going back before they switched to IFRS accounting in 2021, they've had a pretty steady upward trend. Revenue, or net sales, how they used to call it, and profit, it's been going up for the past decade.
That's what you want to see, consistency. It means their business model is fundamentally sound.
Okay, their profit attributable to owners of parent, that's the profit that actually goes to the shareholders, that was 43.733 billion yen last year, up 12.4% from the year before. And their return on equity, ROE, that was 11.4%. Those are the numbers investors care about.
Yeah, it's about how effectively they're using the money invested in the company. And an ROE over 11%, that's good. Shows they're doing something right.
So what's driving all this? Well, it's pretty clear their overseas business is the engine. Over 70% of their revenue and over 80% of their profit came from outside Japan last year. That's the global strategy paying off, especially in North America.
It makes you wonder, what would Kikkoman be like if they'd never gone global?
Yeah, totally different company.
Yeah.
Now their domestic business, they're having a tougher time. Raw material costs, logistics, the weak yen, it's all eating into their profits.
It's a reminder that even if you're a global giant, you still have to deal with what's happening in your own backyard.
Right. And the CEO, he made an interesting point. He said it's not just about selling products anymore. It's about showing people how to use them, giving them ideas. Especially overseas, they're developing recipes specifically for those markets.
That's a good way to build loyalty, Become part of people's everyday cooking.
Okay, so how are they going to reward their investors? Well, they've got a dividend policy. They aim to pay out 35% of their profits as dividends, and they want those payments to be stable, predictable. They're also open to buying back their own shares, depending on the market and their cash situation.
That's a good mix. Dividends keep the investors happy. Buybacks can boost the share price.
Last year, their total dividend was 78 yen per share. That included a special commemorative bid. Their payout ratio is 34.2%, so pretty close to their target. And for this year, they're forecasting a dividend of 93 yen per share.
So things are looking up for the shareholders.
And they're not just giving money back, they're investing for growth, too. Between now and 2025, they plan to spend about 185 billion yen. That includes things like upgrading their domestic operations. They're building a new plant for Kikkoman food tech with a big focus on automation. 11 billion yen for that alone.
Gotta stay competitive, right? Invest in technology.
They're also expanding their soy sauce production overseas, opening new wholesale locations, and they're looking at new business ideas, ways to create more value, solutions to social issues. That could be anything, new investments, acquisitions, R&D. And they're going to put more money into marketing to drum up new demand.
So they're not resting on their laurels. They're trying to grow in a lot of different ways.
Yeah, and they've got this cool program. They call it New Business Challenge K2. It's basically an open call for ideas. They encourage employees all over the world to submit proposals for new business ventures.
That's smart. Get everyone involved, see what they come up with.
Okay, so what's the future look like for Kikkoman? Well, the CEO seems optimistic. He thinks they can keep growing long-term, especially globally. And they're really good at adapting their products and recipes to different cultures. Plus, people all over the world are more open to trying new foods these days.
That's a good point. Globalization's playing right into their hands.
Right. And sustainability is a big focus for them. They want to tackle environmental issues, food and health, social issues even. They see it as a way to do good and create new business opportunities.
Yeah, that's how it has to be now. Consumers care about that stuff.
Absolutely. And they're really emphasizing their people, developing their employees and also embracing technology. They've got the Seasoning Kitchen online. It's a database of recipes from all over the world. And they're using a lot more IT in their factories.
Gotta stay ahead of the curve.
So yeah, they've got some challenges, especially domestically. But overall, I think Kikkoman's in a good position.
Yeah, they're a company to watch for sure.
So let's recap. Kikkoman, they've got a long history. They're doing well globally. They're committed to diversifying and innovating. Their home market's a bit shaky, but they're strong internationally, and they're investing in the future.
It's interesting, right? They've got this, centuries-old tradition, but they're not afraid to change and adapt.
That's the key, isn't it? Think about how they've managed to become part of so many different cultures around the world. It's not just selling a product, it's like building relationships.
Yeah, there's a lesson in there somewhere about how to build a truly global brand.
For sure. If you want to dig deeper, check out their 2023 corporate report. It's all there. Thanks for joining us.